there's already so much dispiriting news on inflation, on the growth outlook, on the BOE really looking like they intend to move quicker, to take more action. On top of this, you've just got this chaos politically. Give us your views on these rapid developments that, are changing as we speak.
Yeah, I think you said on your introduction, which you probably recorded an hour ago, that there were 30 resignations. I think there are 50 now. Obviously, there's been the background of Brexit, which has complicated things, lowered GDP, raised the price of goods. But obviously, we have tightening by the Bank of England coming, and it's quite clear that that's come too quickly. They were worried about inflation, but again, consumer confidence tumbling, and all the measures of output looking back. Both March and April already, the Office of National Statistics has said were negative. So it looks like in recession. Now, the political chaos is a really important factor. We'll see how the markets respond. But we had a Chancellor of the Exchequer appointed today who it may be like an internship. He'll be gone by Tuesday. And so we're having a government sort of collapsing around us. Markets seem to be fairly sanguine about it to this moment, but we will see. I mean, I certainly think that the Bank of England shouldn't have raised rates as much as it did, shouldn't have made the mood music that it's done. And it's quite clear that it bears major responsibility for plunging the UK into a recession. And its financial policy report yesterday, which contains 4 of the 9 members of the MPC, basically warned about the catastrophe that they had created in their other committee by raising rates too soon. And they predicted that they will be creating recession at a time of political turmoil, at a time of trying to adjust to Brexit, issues in Ireland, and so on. So this is really pretty catastrophic as a prime minister desperately tries to hang on to power. But looks like, I think the betting is that he will be gone by Monday. The question is whether he's gone by tomorrow morning. Great.
So, Danny, I mean, this is very much crystal ball gazing, but the fact that Boris Johnson is just hanging on to power, what do you make of this, and what sort of happens? Because there are some options, right? Whether there's going to be an election straight after an exit. Obviously, this doesn't automatically trigger any kind of change in government. No. What happens from here?
Well, just for listeners to be aware that the British people do not vote for a prime minister. This is somebody elected by the members of Parliament. And also note that when ministers resign, they're still MPs, and they're leaving their jobs as a minister, becoming an MP. It makes it very hard for the Johnson himself to actually run a government. But even if Johnson is pushed out, the controlling Conservatives have a majority of about 80 seats. So there will likely be some degree of continuum, and in some sense replacing him with presumably someone who's less chaotic and has caused less trouble. I mean, that's the issue. So I think for the markets, there's likely continuum here. We're probably not going to see a change of regime, but to some extent, the economy needs that chaos to be sorted out.
So, Danny, in fact, the Prime Minister now working on new tax cuts, deregulation. Wouldn't that really put more upside pressure to inflation? And you have argued in your latest opinion piece that the UK and US central banks are actually overreacting over inflation. Why?
Yeah. Well, remember that actions take a while to have an effect. So the inflation is coming down, mostly because the underlying levels of activity look horrible. If you look at things like the Institute of Directors' views on what its members think is coming are awful. Look at the PMIs coming out of the UK; they're terrible. If you look at all expectations, well, I like to get people to think about consumer expectations. If the consumer thinks that a recession's coming, if the consumer thinks its financial situation is going to worsen in the next 12 months, what do? And they start to stop spending. And that's the data that we've seen. And I do think the Bank of England and the Fed have overcooked it. And listening to the comments you were just playing by the European Central Bank and the Bank of Japan, faced with the same situation, and they've been really rather more cautious, sensibly so, waiting to see what's happening. It's very hard to predict these days with COVID and so on. So it looks like the Bank of England and the Fed jumped too soon, responded to the hawk saying it's all about inflation, whereas actually it's about unemployment. And just to say to people, just so people who keep saying, oh, inflation is a terrible thing, what we know is a 1 percentage point rise in unemployment is about 10 times worse in pain terms, and written by a famous economist in New Zealand. And so he shows it's about 10 times more painful to people than a 1 percentage point rise in inflation. So a slowing economy really hurts. And the problem, I think, in much of the conversation I've been hearing is when people say, well, we've got to solve inflation. Well, that's fine. But what is it that you solve it with? And the probability is that that's much worse.
You're saying that they're actually focusing on the wrong thing right now.
Yes.
But what about just take central bank action out of the equation? Is in 1970 style sort of price wage spiral a thing that can happen now?
Well, I've been writing columns about that. I mean, I started out in the early 80s thinking about wage. I wrote my PhD thesis on this. The answer, I think, is no. Workers feel very worried in some sense. They're worried about their jobs. What was interesting in the 70s was that was the period that was so anomalous in a way. There had been Paris riots in the 60s, and union membership grew all around the world, and workers were able to bargain for wage increases that were substantial. Well, we've seen declines in unionization around the world, globalization, the gig economy, attempts by Reagan and Thatcher and other governments around the world to limit the power of workers. So the answer is no wage price spiral, but actually what you're starting to see in the UK and potentially elsewhere are workers going on strike. Public sector workers saying 9% inflation and you're offering us a 2% pay cut, enough's enough. So in the UK, we're seeing strikes of train drivers and teachers and postal workers and even barristers, even QCs saying you're not paying us. So this is really a tough time, but I don't think there's a wage price spiral, but there certainly may well be industrial discontent.
Danny, always great having you with us. And really, what a great time to have you on with everything that's happening in the UK and here as well. Danny Blanchflower.
We'll talk tomorrow and see what happens.
I know, and things will change. More than 30 ministers. Let's see what happens.